Hello, everyone. Welcome to our live session, Help, Home Buying Explained for Loans and Processes. I'm Andy Woodman, Director of Mortgage Lending at TVFCU. And I'm joined here today by Jessica Parrish, TVFCU Mortgage Loan Originator and two-time Chattanooga Mortgage Banker of the Year. And also Mike Robertson, seasoned professional realtor with NuVision Realty. Thank y'all both for joining us.
Thank you.
So whether you're a first-time home buyer or looking to refresh your knowledge, you've come to the right place. Today, we're going to break down the home buying process step by step, answer your questions, and provide some valuable tips to help you negotiate the real estate market with confidence. But before we get into the nitty-gritty details, be sure to drop us a message in the chat. Let us know where you're at today. If you have any burning questions, we'll do our very best to go and answer those as we go through today's session. If not, know that we'll do our very best to also get back to you at a later time and provide those answers. So, grab your lunch, sit back, get comfortable, and let's dive right into the questions. So let's start this with Jessica. Jessica, you're looking to purchase a home. How do you get started?
So to get started, the first thing that you would need to do would be contact a loan originator. You would need to have all of your financial information together so that you and the loan officer could go over that and find out what fits your budget, what price range you need to be looking in for a home.
Gotcha. So basically kind of really get qualified,
Yes,
find out kind of what the qualification, what you're looking to buy. So Mike, let me ask this, is it important to get pre-qualified before starting the process to look for a home?
100%. Just a real quick example that just happened the last 2 weeks. I had a house I listed. First 24 hours, we had 8 offers on it, over list price. So when I'm presenting those offers to the seller, it really makes a big difference whether you are pre-qualified or pre-approved in that process, and that it's with a very reputable lender.
Gotcha. So I'm guessing pre-approval probably carries a little more weight when we're talking to you to go buy the home.
100% as far as me and the listing agent. Yep. That pre-approval means that you, the lender, has already got their financial statements. You've already verified all that information. It's just not they filled out an application.
Sure.
And so they already have that. So we're through that process already.
Gotcha.
And so that does hold weight when you are putting an offer in.
Gotcha. So Jessica, I guess, like, again, the difference between the pre-qual and the pre-approval, do you want to explain to everybody kind of what that looks like?
Yeah, so a pre-qualification is you submit an application online. They typically pull your credit and say, okay, based on what you've told us, you look like you can purchase a house. A pre-approval is a little more in depth. We look at tax returns, we look at pay stubs, we look at everything and make sure that what you have told us is factual and you can truly make an offer on the home.
Gotcha. So I know everybody's thinking, wait a minute, you're going to pull my credit. Won't that make their credit score go down?
Yeah, so that's a question we get asked a lot is when you pull our credit, is it a soft pull? Is it a hard pull? And it is going to be a hard pull. We're going to pull all 3 credit scores. We'll go by the middle score of the 3. And it can impact your score by a few points, but it's typically not detrimental to your credit score.
Gotcha. Yeah, just so most folks know, if you're allowed to shop and find the best deal, right? So a lot of times, as long as the credit pulls within the same realm for the same loan type, it won't impact the score as much as if you say went and got a car loan, then a credit card, and then applied for a home. Those are 3 very different kind of credit pulls, so to speak, which could potentially cause the score to go down more.
Right. But
again, if they're looking, to buy the home and they go to multiple lenders, usually, again, you might see a slight decrease, but nothing really of significant impact. But I know nowadays, most people, you see a lot of ads for people to go online and, check your credit score. A lot of times we find that that doesn't always jive with what we pull.
Right. Yeah. So, and I tell everybody, Credit Karma, I've seen it be spot on. And I've seen it be 100 points off in both directions. It's a great tool to track what's on your credit report, what's reporting, but that score isn't always accurate.
Gotcha. So in instances where, let's say, maybe the score is not quite where they want it to be, what are some steps people can take to go ahead and help increase that?
Yeah, so there are several things that we look at on a credit report. One of the big things, especially if you're just starting to build credit, that I recommend is to get a shared secure loan. We offer those at the credit union. We don't pull your credit to do the shared secure loan, but we report it to the credit bureau every month. It's a great way to add a line, or you can even do 2 and add 2 lines to your credit and start building, as long as you make on-time payments every month.
Gotcha. All right, so Mike, so they've talked to Jessica. They've gotten pre-approved for their loan. So how do they kind of go under contract? Like, what's that process like approaching you?
So obviously they've already contacted a very, very good agent, right?
Absolutely.
They found the house that they want. Obviously they need to make that offer, but with that offer again, they need an agent that's going to communicate with the lender and get that pre-approval letter from them and submit that offer up front, right? And then obviously depending on what type loan they are approved for will depend on their down payment, their closing cost. And obviously me as an agent, I try to work with Jessica up front. We've worked on several deals, right?
Sure.
Jessica will see me calling her up front and saying, hey, Jessica, what are we looking at closing cost on this loan? What are we looking at total out of pocket? How do we structure that offer to make it the best for the buyer?
Right.
Not the best for the seller, the best for the buyer, right? And so whether that be the seller, which we are in a little bit of a market where the sellers are doing some closing costs, right? Or
Right.
toward that. So, and it may be that that buyer can get to put some extra money in their pocket. So we write that offer and then after that, we certainly, we get them to closing.
Gotcha. So as someone's out there looking for a realtor to work with, kind of what's your advice for what they should look for and how do they go about it?
Oh, that's a loaded question. Okay. So let me
So
start
this
off
was going to
by
be
this.
easy.
There you go. A loaded question. So Warren Buffett said, you are a fool if you do not have a very high-end qualified agent. Obviously, you want a seasoned agent that knows what they're doing, right? Some agents are licensed in multiple states, being that we are on the Tennessee-Georgia line. I'm personally, my wife and I both, we are licensed in Tennessee and Georgia.
Sure.
We are very seasoned. And there's a lot of ways, and I can tell you some horror stories, right, to where the agent did not write the offer correctly, and it wound up costing the buyer more money in the end. So, again, you want to interview that agent, figure out what that agent's done. You may even ask that agent for references in that process. And I welcome, folks to ask for those references.
Sure.
But I also look at real estate as an opportunity to serve somebody. That's really what it is. And our business model is to serve. And so if you don't have an agent that's going to serve and not be available to answer the phone or communicate with your lender, communicate with the title company, it's not just we unlock a door and we show a house and then we show up at closing to get a paycheck.
Right.
You want an agent that's going to follow you through that appraisal process, the home inspection process, be communicating with your lenders, the title companies, communicating with you on when you have to wire your funds to closing. That's a major thing.
Right.
So you want somebody that's going to be with you through the step and not pass you off to somebody else. So in other words, you see me and then you're going to see several other of my team, or I'm going to pass you off to folks in my team. That's
Right.
not the case.
Gotcha. And Jessica, I would think the same would apply for finding a good loan officer, right?
Absolutely. You want someone that's available and that can answer all of your questions, go over everything with you. And like he said, make sure you send your money to the title company.
Right.
You need somebody to hold your hand essentially in every stage. We do this every day, but people don't necessarily go through the process themselves every
Right.
day.
Yeah, but again, think about this. A home is usually most folks' biggest asset that they own,
Correct.
right? So this is not something to be taken lightly, and it is a process. And I think what a lot of people don't understand is the rules constantly change. Having someone that knows that and can kind of walk them through it is kind of paramount to the whole thing. So, all right, we've gone under contract.
Okay.
We've got our loan pre-approved. Kind of how long does this process take?
So typically, 25 to 30 days from the time you're under contract to the time you close. We order title work, we order an appraisal. Third-party items like that sometimes take a little bit of time. So when we get that all ordered, that's when we'll have due dates and we'll be able to say, hey, this is when this is due back. This is when, just create that timeline of when you're going to see movement in the file.
Gotcha. And Mike, I assume from the contract process too, y'all are pretty accustomed to that same kind of timeline.
100%, 100%. But I will say this, just a note to you guys are great in what you do. And if you're looking for a loan, I would definitely recommend to call Jessica. I've seen Jessica and TVFCU push stuff through faster than most folks, and that we were in a crunch in a timeline. So kudos to you guys.
Gotcha. Thank you. Appreciate that. All right. So let's flip the script here. And you said, again, you're a listing agent as well. So for someone that's never had to sell a home before, kind of how do they get that started?
Boy, you're loading the questions up today, right? So again, and I want to state this, I am not an appraiser, okay? I am not an appraiser. An appraiser is the only one that's going to find the value in the house. However, as real estate agents, we can do something that's called a CMA. That's a comparable market analysis. So what is a comparable market analysis? Okay, so that's where I go find similar homes that's within a certain radius of yours. We make adjustments to the home and try to find a range where your house, the value could be in your house, okay? Here's one of the number one mistakes that I've seen that, and Jessica, I'm going to pick on you for just a second, okay? I'm going to use you as an example. So if Jessica comes to me and says, Mike, I want to sell my house. And I look it up and I go, Jessica, the house next door to you sold for $200 a square foot or $100 a square foot. And that means yours is going to sell for $100 a square foot. I hear it all the time about price per square foot, price per square foot. That is not true. And you'll have to forgive me. I have a second grade mind. Okay. But let me give you an example. In a Ford F-150 pickup truck, you have an XL that's a base model truck. You have an XLT that's got some more options. You're going to have your limited, you're going to have your platinums, you're going to have all those, right? Well, it would be like me saying, I'm going to sell this platinum truck for the same price as this XL because it has the same engine, transmission, same size tires. That's not true. You're going to have to adjust for those extra options that are there. And I see a lot of times that agent or buyer or sellers will interview me and they'll say, after my interview, and I'll sit down and I'll give them data, not my opinion, right? This is the data. This is what supports this. It's not me just pulling something up. And they go, well, the other agent told me because of the price per square foot over here, this is what mine would sell for. And sometimes it's $60,000 or $70,000 difference. And we, for an example, the house that I was just telling you about a while ago, the seller come to me and said, look, they've told me it's $250,000 for my house. And I said, look, I'm telling you, when I run the numbers, we're somewhere between $290,000 and $310,000. We go on the market, we have 8 offers, and our full offer is at $310,000.
Huh.
And so my point is you want to make sure that you have an agent that has the data and has that information. And not only that, I see first-time home buyers give a lot of money away that way, right, too. So you want to, but you also don't want to make sure you over elevate the price because the house is just going to sit there.
Right.
So you want to make sure that you have somebody qualified to do that, and you do not price it based on price per square foot.
Agreed. I can share that. I'm a former appraiser. And so, there are certain things that you can add to a house that may be valuable to someone. Say, Jessica's looking for a home with a pool. If I'm out there looking for a home and I do not want a pool, I place less value on that than say she would. So
that's correct.
Again, those are things that affect value, and I think what a lot of people don't understand.
That's correct.
Gotcha. All right. So first-time home buyers, let's get into that because I know that's probably a large contingent out there watching today.
Mm-hmm.
If you're a first-time home buyer, what's some advice that you have for those folks looking?
My biggest advice for a first-time home buyer is sit down and write out your budget. Figure out what you're comfortable spending on a house every month. Take into consideration utilities, childcare, date night, everything. And then you want to have that so that when you do talk to your loan officer, you can let them know what you want your payment to be. Not necessarily what am I qualified for. It's more about what you're comfortable paying each month.
Right. Gotcha. So not to be house poor, right?
Right. You don't want to, pay more than you're willing to pay for a house, have a high house payment, and not be able to have a life.
Right. And I assume you'd probably recommend the same thing, right? You get pre-qualified.
100.
They've talked to Jessica. They found that sweet spot. But all of a sudden, we're looking at houses maybe a little higher than that.
That's correct. That is 100% correct. They always send you houses that's way more money than what they're approved for, right?
Of course. Are there any special programs out there for first-time home buyers on the loan side?
There are special programs. Here at the credit union, we have really great internal programs that we offer that you're not going to find anywhere else, such as we can go up to 100% with no PMI, depending on credit score, of course. But that's huge for a first-time home buyer because you're not having to pay the additional PMI every month to essentially protect the lender.
Mm-hmm.
And if you don't have to put a down payment, that money that you've set aside, you can save that for a rainy day, furniture, anything that you're going to need that's going to come up. Because when you're buying a house, there's things that are going to come up that you're going to have to pay for.
Absolutely. Unlike renting, right? Like where
Right.
the landlord's responsible if the AC goes out, and
Mhm.
inevitably, what's the old rule of thumb, right? Something will break. So,
Yes.
Will
to
break.
make sure you have some money set aside to go ahead and fix that is kind of pretty important. So, all right. So down payment, like coming up for closing costs, things like that. Are there ways to get assistance with that?
There are down payment assistance programs out there. Tennessee has some, Georgia has some.
Mhm.
Then you can also get gifts from family members. That's a good option if that's available to you.
Absolutely. Yeah, I think what most people don't think is, again, there's all kinds of programs out there, be it on the city, county, state level, federal level, and there's resources where you can kind of research and see what's available for you. A lot of times I think they have income limits, so
Right.
like you can't make a certain amount of money to qualify, but those things do exist to help people kind of come up with those funds.
Yes.
As far as the closing costs go too, we were just talking about this a little bit before we went live here. I guess, if someone's looking for help with that, can the seller potentially help with that?
Seller can, and obviously Jessica can say a little bit more to this, but it certainly depends on the top loan and the amount of money you're putting down. So where the conventional loan, if you're not paying more than 10% down, the seller can only contribute up to 3%, but your government loans, they can contribute up to 6%. But you guys have that, your in-house ARM loan that's 100% financing. It doesn't have to be in a USDA area.
Right.
So it's 100% financing, no money down if there's credit scores over a certain number, and the seller can contribute up to 6% right off the bat. So that's a win-win for you guys.
Yep, absolutely.
And my buyers.
This is a fantastic segue. So Jessica, like conventional loan, government loan, kind of what's the difference?
Yeah, so you have your government loans such as VA, FHA, and then you have your conventional loans. VA loans are going to be geared towards veterans. They can go up to 100% financing. The VA loan or the FHA loan requires a little less of a down payment. It's 3.5% down, which is great for the first-time home buyers. They go a little bit lower on credit score. Debt to income ratios, they can go a little higher than you can on a traditional conventional loan. So they all have their positives and their negatives. Conventional 5% down typically. Like I said, in-house loans, we can do up to 100%. But
Gotcha. I guess so. As you're looking for a home, kind of, Mike, what's the typical price of homes in our area? I mean, again, I know you kind of toe the line between the
He's
two.
giving me all
You're getting the hard questions. I'm throwing the softballs.
So the median price right now in 2024 has been right almost at that $350,000. The average price is almost at that 380.
Wow.
Well over 380 number. But that being said, a lot of people I'm hearing right now saying interest rates are up. And I'm going to wait till the housing market crashes and they come down and prices are going to come down and prices are going to come down. Well, I'm just going to tell you, I can show you numbers. Prices are not coming down. They're continuing to go. And I really think right now is the time to buy because sellers are, we're traditionally, we're not in a market that every house out there is a multiple bid offer and we're all going over list, where we were seeing a lot of that,
Right.
In 2021 and early 2022. So I feel like we've had 18 months worth of some of the sellers starting to negotiate, and the price of houses aren't going down. So don't wait. And obviously then you can refinance maybe when the rates come down.
Absolutely. All right. So we're going to throw a hard one to Jessica then. So Jessica, where do you see rates going?
Yeah. Thank you.
that's a great question. I mean, every different outlet that you look is going to tell you something different. So that's really hard to say. Used to we could kind of tell where rates were going, but the past several years we haven't been able to do that. I say it weekly: marry the house, date the rate. You can always refinance at a later time and get your payment down, get your interest rate down. But like Mike said, the house prices aren't going down. If you find a house you love and you can afford it now, go ahead and do it.
Absolutely. I read an interesting stat. I think it was in 1971. If someone bought a house, the rate was close to 9 double digits percentage. And if you had waited for rates to come down, you would have waited close to 20 years, I think it was, for rates to be of a point where it made sense and it came down below that point. So again, same thing. Just if it's the right time for you, just go ahead and do it. And like Mike referenced, you can always refinance out of it later, hopefully.
Correct.
All right, so to lock, not to lock. We talked about rates. I guess explain to folks what a rate lock is and when should they do it.
Yeah, so a rate lock means this is what the rate is today. You can either lock it in or you can choose to float the rate. If you choose to float the rate and the rate goes up tomorrow, you can't go back down to that lower rate. But you also, the rates could go down. It's just a risk you take. It depends on how risky you want to be.
Sure. And we talked before, I guess, about fixed rate loans, variable rate loans. Would you mind kind of just giving folks an idea of what the difference there is?
Yeah, so you have your traditional 30-year fixed. Once you lock that rate in, it's locked. It stays the same until you pay it off, refinance, whatever it may be. An adjustable rate, we have one at the credit union. You'll hear it referred to as an ARM. Our most popular is our 5-6 ARM. It is a 30-year loan. The interest rate is fixed for the first 5 years. After that initial 5 years, the rate can adjust every 6 months. Mm-hmm. So you have to go into that loan knowing you are going to want to refinance if you're still living in the home or still planning to owe on the home after the initial 5 years.
Gotcha. And I think, too, it would make sense for someone to look at an ARM if maybe they know they're not going to be in a home for a certain amount of time, right? So say newly married couple that plans to expand their family down the future. 2 bedrooms may be fine then. 5 years from now, maybe not. So they know they would probably look to move, right? So
100%. I see that all the time,
yeah.
Right? As a matter of fact, I think the national average, last I looked, unless that's changed, traditionally people move every 8 years.
Yep.
And that being said, though, there's a lot of folks that they do move inside that 5-year time.
Right. So when we talk about rates and points, I guess explain to everybody what it means, what a point is in terms of their rate lock.
So on some loans, you can pay points, which will lower your interest rate.
Okay.
So you can pay upfront additional funds at closing so that your interest rate for the life of the loan will be a little lower.
Gotcha. So if in our scenario where we have the seller paying, contributing towards closing costs, they can use that.
They can use those closing costs and buy down the interest rate so that you save money over the life of the loan. It gets a lot more bang for your buck than just paying the closing cost or lowering the sales price by $10,000.
Gotcha. All right, so we're talking about cost fees. So some loans have something called an origination fee. What's that?
So here at Tennessee Valley, we do charge an origination fee on our conventional loans, and we charge 1% of the loan amount, and that is our lender fees. So closing cost, you're going to have your lender fees, you're going to have your title fees, you're going to have your appraisal. All of the fees that go into the loan are considered closing costs set up for escrow. At the credit union, like I said, we do charge the 1% origination fee, but right now we're running a promotion and we pay for your appraisal.
Excellent. So, but I mean, the fees, just because we charge an origination fee, that doesn't mean that those costs may necessarily be higher than those out there in the marketplace, right?
Absolutely not, because everybody has their fees that they charge. They may just word them differently.
Absolutely. So then I'd recommend getting a loan estimate probably, go ahead and just use that as your comparison.
Absolutely. What I do when I pre-qualify somebody, I always send them a breakdown of the fees and exactly what we're going to charge and, the estimated based on that sales price.
Gotcha. All right. So while we're on the topic of fees, are there realtor fees? Like, does the realtor get charged anything?
So that's a great question. As far as the realtor, some agencies will charge an admin fee,
okay,
and that will get charged to that buyer, and that buyer has to pay that, and that could be a part of their closing, right? Or their funds to close. One thing that's obviously, it's all been in the news lately, and I knew
I was going to try not to go down there for you, but
I knew it was all going to be in the news. One of the other things that's very important if you're especially any buyer, but first-time home buyers or somebody who hasn't bought in 20 years, they just don't know. Typically what happens is the seller will pay a commission to the listing agent. Out of that commission, that listing agency, out of that seller's proceeds there that the seller's paying will then share or compensate a buying agent to bring a buyer there. So that agent, let's just say Jessica is an agent and you're a first-time home buyer and I'm the listing agent. Okay. Jessica shows my house, but my seller is not willing to compensate a buyer's agent.
Mhm.
And if Jessica has a exclusive buyer's brokerage agreement with you, depending on what her brokerage agreement has, you may have to pay Jessica that commission that Jessica is due at closing. So it's very important that on the specific house that you verify that your buyer's agent will verify, is that seller going to compensate a buying agent? And if not, you're going to have to compensate that buying agent, and that could also be cost out of that.
Gotcha. If you don't mind, like, are you seeing more of that as that's been in the news? Because I know traditionally it is the listing side that generally takes care of that.
That is 100% correct.
Has there been a lot of swing in that?
There's not been a ton of swing. Okay. So there's not, I mean, most everybody understands, and I hate to use this. So Ford, you're getting a commercial here, right? Ford will say, hey, look, it's running through this date. We've got rebates up to $15,000 or $20,000 or $5,000 rebate on F-150 if you buy it during this time.
Right.
The only thing they're doing is they're incentivizing buyers to come buy a truck.
Right.
Me, I'm the same way. And just FYI, if I'm a listing agent and you've comped me 6% commission, I'm going to give half of my commission to that buyer's. Some agents will not do that. They will. So if the seller compensates me, so to say 6, then I'm only going to give 2 to that side where I get more, right? I don't do that because I think it's a disjustice to the seller and to the buying agent, because the buying agent works just as hard, right? So that being said, all I'm doing is in that listing agreement with the seller, is me and the seller are figuring out what we want to do, and we want to incentivize Jessica, if she's an agent, to bring that buyer to find that house. So most are that way. But am I seeing listings that have 0 compensation? The answer is yes.
Well,
the answer is yes.
Yep. All right. So back to the loan topic here. So what's the least amount of money someone can put down?
So the least amount would be 0%.
So literally walk into a home, no money down.
I have a situation right now where the seller is paying all of the closing costs. They're doing 100% financing. They're actually going to get their earnest money back at closing. So they don't have any skin in the game when it comes to bringing money.
So I know we're renowned for acronyms in the mortgage business. So when we talk 100%, 80%, we usually use LTV.
Yes.
You mind explaining to everybody what that means?
So LTV is loan to value. And what that means, say 80% LTV on a $100,000 house is $80,000. So if we say, the max LTV we can go is 80%, that would be $80,000 on a $100,000 home.
Gotcha. All right. So someone that's looking to buy a home, how long do they typically, obviously we prefer they have a job. So how long do we like them to be in that job?
So we would love to see them on the job for at least 2 years. If they've been on the job for 2 years, we can use their base pay, we can use their overtime, we can use their bonus, we can use all of their income. Gotcha. Same with self-employment. We do want you to have that, 2-year history. We want to see 2 years worth of tax returns so we can take that average of your income.
Gotcha. So you just touched on it. Self-employed borrowers do need to provide.
Yes. So self-employed borrowers, we're going to want to see 2 years worth of tax returns for your personal tax returns and your business if you file separately. We're going to look at those. We're going to look at the bottom line after deductions, which is really important because you may make $500,000 but only claim to the IRS you make $15,000. So we're going to look at that $15,000. So that's how, and that goes back to getting pre-approved. It's very important to have somebody to go over that because, you don't know if you're self-employed and you apply and you do make $500,000 a year, but you have all of your deductions. That's what we're looking at. We're looking at what you're telling the IRS.
Absolutely. Yeah, I always joke when we do home buying seminars, I say it's your accountant's job to hide your money. It's your mortgage person's job to find it.
Mm-hmm.
So, all right. So let's say someone's had some imperfections or bumps in the road along the way, filed bankruptcy. Are they eligible to buy a home?
Yeah. So if they have filed bankruptcy, depending on the type, we typically want to see at least 2 to 4 years of them rebuilding before we're able to do a loan. But we can absolutely look at that. Gotcha.
You also referenced earlier, I'm kind of jumping back to acronyms, MI, PMI, kind of just explain to, let's elaborate that a little bit.
mortgage insurance, private mortgage insurance. What that is with most loan types, if you do not put at least 20% down, you have PMI. That is an additional amount that you're paying every month. It doesn't really go towards anything for you. It essentially is protecting the lender because they took a bigger risk. Again, our in-house products do not have that, but like our 30-year fixed, we sell that loan. So if you don't put 20% down, you're going to have PMI. If you go FHA, it's going to have PMI, no matter what you put
Gotcha. When we talk about closing costs before, kind of roughly, how much do you think that adds? Like, what's that going to cost a borrower?
So a general rule of thumb is about 3 to 5% of the loan amount typically. It's going to include all of your fees. It's going to include your first year of homeowners insurance. It's going to include setting up for your escrow account. So all of that together, generally speaking, 3 to 5% of the loan amount.
And can people usually finance that into the loan, or do they usually have to pay that out of pocket?
On a purchase, you would need to pay that out of pocket.
Gotcha. But later, if we refinance.
If you refinance and if you have the equity there, then you can absolutely finance that in.
Gotcha. So, all right. Oh, go ahead.
But going back, if the seller is paying that closing cost, if we write that up,
That's right.
that's where it's important to make sure you know how to have an agent to write that up. If we show the seller paying that, as you talked earlier, the buyer doesn't have to bring that out of pocket.
Right.
Absolutely. So, Mike, so as we go through the loan process, you even talked about it before, title company, like kind of what's their role in this whole thing?
Well, it's all obviously you want to make sure you have clean title when you're taking possession of something, correct?
Yep.
In horror story, there was a lady that she did not believe in buying mortgage insurance, and she purchased or title insurance, title insurance. And she purchased a home with no title insurance and wound up there being a problem, and somebody didn't get signed off, and literally she had to pretty much give the home away on what she paid. She lost everything.
Wow.
And so you want to make sure you have a great local title company that's making sure we have clean title, and obviously you guys won't let a loan close without good clean title. And as you were talking earlier about lenders' policies and owners' policies and so forth and so on, that's what they're there for.
Gotcha. And I guess with the closing process, does someone have to, I'm assuming they have to be in person to do so?
The answer is 100% yes. They have to be in person to sign. I say that. We can do a mail away with that title company, but they then have to be in person in front of a notary wherever they are, and then mail that stuff back. But yes, they have to sign everything. I love electronic sign with what we have today in real estate, but I don't think we'll ever get there with a loan.
Gotcha. Yeah, we want to make sure the people buying are actually the people buying.
Yeah, that's correct.
So escrows, you mentioned escrows. Like what exactly goes into that?
So in your payment, you have your principal and interest, and then you also have your property taxes and your homeowner's insurance. So we will set up your escrow account so that we have enough money when property taxes are due, we can go ahead and pay that. So you don't have to worry every year about having money saved up for your homeowner's insurance and for your property taxes. That's taken care of in your loan.
Gotcha.
With that being said, it can make your payment adjust a little bit every year because your property taxes are typically going to change and your homeowner's insurance is typically going to change every year.
Gotcha. So let me play devil's advocate here and say, I'd rather pay that stuff on my own. Do I have the option to?
You do have the option to, as long as you are putting down the right amount of money. Typically, we want to see at least 20% down for you to not have to escrow.
Gotcha. So let's say you're under contract, okay, and you're the listing agent and the seller of the home, but a better offer comes along. Well, can you do anything about it?
Not unless that original offer falls apart.
Gotcha.
Right. Not unless that. So that's another reason to kind of protect buyers. Once you are bound and under contract, right? Once you're bound. Now, unless that buyer is defaulted and we can't square that away, right? Mm-hmm. But that protects the buyer. Even though there's a higher offer comes in, nothing you can do.
Gotcha. So, all right. So let's go back to the seller here in this case. And so, should you take steps to fix up your home before getting it ready to sell, or what do we do if we know there's things wrong with the house?
So thank you. Yes, the answer is yes. If possible, the answer is yes. There's three things you can do for the least amount of money to make your house look the best. First thing is paint. Next thing is pressure washing and landscaping, just curb appeal, right? And the next thing is obviously your flooring, right? Those and staging, obviously, making sure the house is staged properly. My wife does an amazing job with that. And with her and I meeting together with sellers, we make suggestions, and moving furniture out. And we do professional photography, have them come in, take all that stuff that's very high end. And obviously a picture's worth 1,000 words, right?
Absolutely.
And mostly today people look at pictures. So when we, for an example, if I listed your house today, it's going to go on approximately 96 plus websites.
Oh, wow.
So when it goes on there, most people are looking through the pictures, right? And so if they don't get past the third or fourth picture because it's all cluttered and it looks like it hadn't been painted since 1972, it can be a problem.
Gotcha. Can I ask, fresh baked cookies in the oven during open houses, that's still a thing?
Yes, it can be. That's correct. The problem is as you see, I've been eating too many of those cookies.
You and me both. All right. So the appraisal process, let's hop back into the loan. So again, we're pre-approved, our loan's in process, we're under contract, we've got our loan going, we referenced an appraisal.
Yes. So your appraisal, that is, we send somebody out to appraise your house. And essentially they're making sure that what you're buying that house for, it's worth it. We're making sure that our loan is good enough for what that home appraises for.
Gotcha. And I think a lot of people, what they need to understand is the appraiser actually works for the lender.
Yes, the appraiser is for the lender. So you have your home inspection and you have your appraisal. The home inspection, that's on you. I always highly recommend them, but we as the lender do not require a home inspection, but like I said, very highly recommend getting a home inspection, but it is different than the appraisal.
Yep.
The appraiser may say, hey, I noticed this on the roof, or I noticed this door should have been hanging and it's not. Things like that, but they're not a true home inspector.
Yeah, exactly. We'll see a lot of times on appraisals, items picked up or noted as maybe being deficient, but there's always that caveat that they're not a licensed home inspector.
Mm-hmm.
I'm assuming you're going to recommend the home inspection as well.
It's always good to know what you're buying, correct? It's always
Absolutely.
good to know what you're buying. And also get somebody that's a licensed professional in that area, right? So if it's a structural issue, you want to make sure you have a structural engineer, right? So obviously doing that and knowing what you are buying through that process.
Absolutely. And I think too, right, certain areas have different building codes as well. So what may work in Ringgold, for example, may not work in Ottawa, for example, right? So
Tennessee and Georgia, definitely there's a difference in that. And there's also a difference in building code. And as you know, being an appraiser before, you had different codes in 1970 and 1990 and in 2015 versus 2024. So a house built in 2015, there may be some differences between 2024.
Sure. Gotcha. All right. So Jessica, if I've been pre-qualified for a home for $300,000 and the house I'm buying is $250,000, but there's some things I'd love to do to it. Is there a way to do upgrades and bundle that kind of into the loan?
So unfortunately, there's not. I get that question a lot, but we're basing your loan amount based on what that home is worth. So if we were to give you $300,000 and your home is only worth $250,000 and something happened to your home, there's a $50,000 difference there. So unfortunately, we would not be able to give you the extra funds that you were pre-qualified for.
Gotcha. Now, let me play devil's advocate. I know exactly what I want in a home. Can you build one? Like, how do you go about building one yourself?
So you can we offer construction loans, and we have a really great construction loan product. You only have to close once. So you only have one set of closing costs. So you can find your builder and build exactly what you want. Gotcha.
Let's see. So I know we come up with this all the time. As someone's going through the loan process, is it okay for them to start to buy furniture, get appliances, things like that before closing?
No, don't buy anything. Don't go buy a new car. Don't go buy furniture. If you have to buy something, if something comes up and you have to spend money, call your loan officer first. Let them know, talk through it, and see if you have room to do that. I always tell, even if you have room to do that, I still say I highly don't recommend it at all.
Right.
But if you absolutely have to, you have room to do that.
Right. I know we've had many instances of people thinking they could go and buy a new car, say, and think no one would know. But what most people don't understand is we actually do debt monitoring while a loan's in process.
Yes.
Do you want to talk about that?
We monitor the whole time. Once your credit's ran, we monitor the whole time. So anytime a new inquiry, which means someone has ran your credit, we get alerted. And we'll be calling you and asking, hey, what did you do? Did you open up a new credit card? Did you buy something? What is this for?
Gotcha.
And that can kill a deal really quick.
Absolutely. So I know post-pandemic, we've seen massive increases in home values. People have built up a bunch of equity. What do we think about like taking the equity out of that house to then subsequently buy a new one? What's the process there?
Well, so obviously somebody could do that. They certainly can, right? I've got a seller right now that their house is pretty much paid for.
Well.
And so they've talked about, and if they find the house they want without having to go through that in a multiple bid, so to say, they could get with somebody like Jessica and say, hey, look, I want to do a home equity line of credit or whatever, and how much can I cash out, and how much can I cash out of that house to have cash to turn around and pay for another house. Cash for that house. So that is certainly a possibility that they can do that.
Gotcha. Are you seeing more and more of that these days?
We saw it more when you had the multiple bids and everybody, because a cash offer can be a little bit quicker. So they went ahead and had that home equity line ready where they're good to go. And it could be a cash offer, but obviously they want to get with their lender and make sure that that's going to work for them before they do that.
So if someone's kind of, like you reference again, if someone's kind of has paid their house off or owns it outright entirely, like is Zillow, Realtor.com, are those good places to kind of get the idea of what your house is? I'm guessing by your head rub, no.
No, it's not. It's not at all. As Jessica said earlier, with the credit stuff, as far as she's seen 100 points on one side or another, I've seen 100,000 or more on one side or the other, depending on what's there. So no, you want to get a professional to figure that out.
Gotcha. Understood. Like, I think what most people like, the data that goes into those valuations can vary and fluctuate very wildly. So,
very much so.
Anyway, all right. So let me talk back to the loan process. If we're closed, how long do they have to keep that loan before they say refinance? If they wanted to refinance, we talk about rates being higher now. If rates drop, is there a time they have to wait?
So it depends on the loan type. It depends on, what you're looking to do. But as long as you have the equity, we can do it at the credit union pretty quickly. After the fact, we just might go by the value that you paid for the home instead of the actual appraised value. Gotcha. It just kind of depends on the scenario.
Gotcha. I know we're often asked a lot of times if we sell the loan after we close it. Do we?
It depends on the type of loan that you get. Some loans we do sell, some loans we keep in-house. Even the loans that we keep in-house, though, we do have, it's called a servicer, and they help us with the payments. They help us with the escrow. They help service the loan. It doesn't mean we sold the loan. We still have access to your loan. They just help us with the payments, and it's a benefit to the borrower. There's additional ways to make payments. There's additional tools on the website that you can look at on the servicer's website.
Absolutely. I could speak firsthand to that too, knowing again, between the regulations and the number of people it takes to service loans, there are companies out there that provide that and do an excellent job as a service. And in a lot of cases, a lot of institutions will employ that so that we're covered and make sure that loan's being adequately serviced. We can provide the best service to our members. They can still come into a TVFCU branch, make their payment, and just behind the scenes, someone else is helping us out with that. So do loans have prepayment penalties?
No, our loans do not have prepayment penalties.
Gotcha. And then what about if someone decides, okay, so we have a fixed rate loan or even an ARM and the payment's the same every month, but can they make extra payments?
You can always pay additional towards principal. When you make a payment, there's a designation for that, and you just put in there that you're wanting to pay additional towards the principal balance.
Gotcha. Why? I mean, again, there's a benefit to that?
Absolutely. So on mortgage loans, you pay quite a bit of interest over the life of the loan. So any additional that you can pay towards principal is just going to decrease the amount of interest that you pay.
I know I used to tell folks all the time, a lot of people ask about making bi-weekly payments or having a set schedule, which obviously we can definitely do. But a lot of times if you make one extra principal and interest payment every year, you accomplish the same thing, right?
Right.
And bi-weekly payments shorten, instead of a 30-year loan, you may be down to 25 or 26 years.
Yeah.
Like you said, the less interest you pay, the more money in your pocket. Let's see. We've talked about, let's go back to construction loans for a second, since that's something we've referenced before. Do you need a licensed contractor to build?
Yes. So we do not allow you to self-build, subcontract out yourself. You do need a licensed contractor, builder, and you need an agreement with them. We need to see upfront what you're building. We need to know line per line what everything's going to cost and have a breakdown so we know exactly what we're giving you the money for.
Gotcha. So we talked about building, but let's say, how do you find the land? How do we find the land to build on?
Obviously, that's a great question. Also, I had a realtor say to me, because I work with several builders in new construction, had a realtor say to me the other day that she said, I really wished I'd talked to you before I built my house. And I said, why is that? She said, well, I took my plans to the builder, and the builder said, I will build you the house, not including the land, for this price. She said, so I thought I knew what I was approved for. And she said, I thought I had $65,000 to buy for the land. She said, so me being a realtor, I went and bought a $65,000 piece of land that I liked. She said, but I did not take into account what it was going to cost to clear that land, what it was going to cost to bring power and water to that, the septic system, the dirt work that had to be done. She said, before we put foundation on there, she said, I was already $65,000 over budget.
Wow.
She said, so I didn't take into that cost. So again, if you're thinking of building, make sure you get somebody, an agent or a builder that is taking to walk you through that process before you sign any contracts.
Is there an acreage limit on how much, how much land you need to build on?
So for a limit, we really don't have a limit. If it's anything over 20 acres, we're going to want to look at it on a case-by-case basis, but we really don't have a limit on how many acres that we will lend on.
Gotcha. Well, we're coming up near the end of our session here. I guess let me ask Jessica, if someone's out looking to buy a home, why use a credit union?
So a credit union, we are owned by our members. We are a nonprofit and we're local. So you can call me. I'm available. You can text me. I'm here for you through the whole process, from the time you start your pre-qualification all the way up to closing. I'm here for you, and I'm right down the road.
Do you have to be a member to get a loan with us?
You will have to become a member to get a loan with us, but it is a very simple process, so we can get that taken care of.
Gotcha. Which we can do during the loan process.
Yes, we can do that. You don't have to be a member to get pre-qualified.
Gotcha. And then two, I know we're asked this all the time, if it's two borrowers or multiple borrowers on a loan, do they all have to be members at TVFCU?
Yes, they all have to be members. They all have to have a primary Tennessee Valley account. So if there's a husband and wife, they each have to have a primary account.
Gotcha. And Mike, I'll ask the same of you, right? Should someone use, we talked about, I think a little earlier, but should they really use a realtor to list and buy homes?
Without a doubt. Have somebody there that's trying to look out for your best interest, no matter what.
Gotcha. I guess, Mike, if you don't mind, if anybody wanted to get in touch with you after the fact, what's the best way for them to
Best way to contact me is you can email me at Mike_realtor@iCloud.com. That's Mike_realtor@iCloud.com. Call me on my cell phone at 423-227-1575, 423-227-1575. Work for NuVision Realty. We're located right over off of 153 and Lee Highway.
Excellent. And Jessica, what about you? How do they find you?
So the best way to reach me is call me or text me on my cell phone, 423-635-4338. Again, that is 423-635-4338. You can also email me at jessica.parrish@tvfcu.com.
Great. Well, thank you all both very much for participating in this today. We really appreciate your insight and expertise. Everybody out there, hope you all found some value in this today and we answered your questions. Again, if we did not answer or get to a question that you put up online, know that we will go ahead and respond to that as soon as humanly possible. So again, thank you all very much for joining us, and see you next time.
For all kinds of nests. TVFCU Home Loans. For all kinds of nests. TVFCU Home Loans.